Trading is risky. Have a read of the disclaimer and enjoy the video. Good morning, everybody. Good morning, team. It is a pleasure and a beauty to see a lot of you here today. Some very familiar faces, some new faces as well. What's up, Dennis? What up, Haroon? What's up, Onions? Good to see you back here, man. What's up, Maki, Troy, Dan, of course. Fatoni, new guy, very cool. Almond, how you doing, man? Got a few things on the mind today. Got a few things from last week to work over. Hopefully this will be a helpful webinar to a number of you, especially for those of you that are continuing to improve every passing week and month. What's up, Black? Very good to see you, man. Hello, everybody. So, Susan, what's the agenda today? Well, the agenda today is to cover a few main things over the last week that I've kind of noticed that might help you in some of your psychological areas as well as some of your technical analysis-based areas. And we're going to talk about that today because I've seen, just based on some of the discussions that have happened this week, a few issues that come up when, of course, you're learning to trade a specific way or think a specific way, or thinking that there's only one way to approach a given market, and how that's not always the case. So we're going to go over a few things today. Alex goes, nice video, new video on YouTube. Yeah, there's a new public video on YouTube, of course, just a kind of a put together surface layer of what's taught here, but nonetheless, still a very helpful video to a lot of people. Anton, when's the buzz cut? When I start balding more, I'll cut my hair. No way, it's him. What's up, man? What's up, Dante? Good to see you here, man. All right, so very quickly, welcome to the MentorFX mentorship. If this is your first time being here, if you're a beginner and you just joined up, then this is kind of a message to you that goes, you've made the right choice. You're in a really, really valuable place to be, not just because of the content you get, but because of the people that you now have access to, the kind of community that you're able to interact with, the kind of concepts that you now get to receive, and the software that you are basically going to have now just as a result of being here as well. So you're in a really good spot. There's a lot for you to do. It goes without saying, actually the disclaimer will go into this when I'm editing, when I edit this at the end. So we're gonna jump right into it. As always, these are kind of just weekly calls that we hold with the team to get ourselves started. So anything that's on some of your minds, anything that might have been troubling you, any questions that you guys have, feel free to drop them in the chats so we can take a look, so we can learn together. If you take amazing trades, feel free to drop some of those. Anything really. So anything goes. Usually the way it works is I'll start with some of the stuff that I've seen happen throughout the week. I'll usually do a breakdown of 1, 2, 3, or more of the trades that I've taken in a given week. And then from there, we'll kind of work through the chat, see where we are, and we'll wrap it up. This is a great way every single week to get yourself kind of wired for the upcoming week. It's a good way to just kind of tune back in and focus back up, especially if you've had a good weekend, you've had a crazy weekend, whatever it might have been, or you're new and you are not very used to being centered around the trading space when it actually comes time to trading, right? Because it's often the case that if you're kind of all over the place and you're not 100% focused up or passionate about trading in this given moment, that when a week starts and you can take a week very slowly, and all of a sudden you are learning at a slower pace. You aren't getting better at a pace that you could be getting better at faster. So when you show up to these, you ask your questions, you see what other people are asking, you see how we're watching the markets, you see that it's the same thing week after week after week, month after month after month. You see that the markets we look at don't really change, but you see how we stay out of bad markets and get into good ones. You see how these trends that we talk about play out. You see how the exact same moves that, I've traded, other members have traded. You see how we anticipate and predict moves that are like absolutely astronomical, especially if you've never been able to catch, let's say, a big trend or ever been correct about a trend. You get to see that happen over and over and over again, which is why, as you'll know, these webinars serve as basically as a landing platform, as a build up from the very beginning to your understanding, right? Anybody that's brand new, just having a watch of, let's say, the 10 most recent webinars is in itself, the way I like to think about it, an entire course. You get to see the real stuff, you get to see the back-tested stuff, you get a very good dose of psychology, you get a really good dose of seeing what level of knowledge or what level of trading other people are at. The trade talks and the actual Discord community give you the chance to see that firsthand as well. So you get to see very quickly, especially if you're new, what kind of lies in front of you and what you're working towards, which is, I think, in my opinion, one of the most important things that you can do, because if you're seeing people do it, if you're seeing people use the same stuff that you're learning right now, you become more committed to, and you become a lot more inspired to basically follow the same course. Even if it feels like it's a lot or whatever it might be, you are inspired to do the exact same thing. And when you do the exact same thing and then you start getting the similar results where you're getting funded, you're seeing proper data collection reflected into a profitable trading system, and you see this all happening in front of you, well, lo and behold, you begin to skip ahead of all the people that haven't done what you're doing now, and you also skip ahead all the nonsense that you might have done before into something that now makes sense to you and works for you. So it's a very, very powerful thing, okay? Are we doing outlooks at the end? Yep, outlooks are usually done throughout the webinar. It's not really an outlook at the end kind of thing, because as I break down a trade or trades that I've taken throughout a week, for instance, I might be breaking down, like, so you can see these purple ones. These are trades that I kind of took this week, right? So if I go to Euro JPY, for instance, this is something that I took this week, right? Now, both of them were break evens, which, you know, is whatever. But you can assume that if I was bullish on EJ, there's a very good chance that as I'm breaking down, let's say, this trade, and you learn about why I've been bullish on it, how I've been following it bullish, the reasons by which I've been following it bullish, how the screener had looked, you should be able to take from that and understand that the upcoming week is very likely going to be a follow-through and a continuation of looking for the same things if price sets up along those lines. Similarly, over the last few months, weeks, we've been following and trading gold a lot, right? I had some of my best runners on gold. So you can assume very, very highly that because gold is on my list and has been on my list, and we've been talking about gold for a very long time with the team here, that in the upcoming week, if I spoke about gold today, for instance, even like right now, it's very likely that I'm going to continue to have it on my list. I'm going to continue watching it. And as long as it continues shaping up the way it is right now, I would have no reason that I can't follow this through when the week starts, right? So when the week starts and it begins to set up, there's no reason that I would not take, let's say, a buy right here. So these webinars, remember this, are not just fluff for the sake of fluff and we get to do a Q&A because it's fun. These webinars are a real looking glass, like almost like a crystal ball of a wizard, okay? Of exactly what we've been looking at a time, what was on the watch list, why were they on the watch list, what trades were taken, and how are those trades playing out? How are the markets that we looked at with trades that were playing out still on our watch list or not on our watch list, for what reasons? When you start realizing that each webinar holds the answer to each one of those questions over and over and over again, and when you also realize that you have access to all of them from the very beginning, so even someone that's brand new can watch the most recent 10 webinars and very quickly learn why MentFX or the team has been looking at crypto, has been looking at gold, has been looking at silver, has been looking at oil, has been looking at EJ, has been looking at the XXX JPY pairs. When you start to realize why that's the case, and you get to see firsthand how the concepts used here that are taught to you are being used over and over and over again, well, you develop a knack for also being able to do that. Even if it's not at a very high level, you start to develop the ability to see the same things. So in an upcoming week, when you look at a random pair, whatever it might be, you can look at it from the same perspective and say, are these in line with what I've even seen in the last 10 webinars, or is this more random? That on its own, without anything else, without any of the course material, without any of the other webinars, without any of the material at all, just those 10 webinars, like the most recent 10 webinars, are enough for you to already set yourself apart from a lot of the trading industry in regards to how to think, how to spot markets, how to think about what markets to actually trade, what are the concepts that are used to actually decide if a market's worth trading, etc. Okay? So the outlooks are somewhat at the end, but they happen throughout the entire webinars, which is why it's important you show up to them, because like I said, they focus you up for the upcoming week, and you get to see firsthand how the stuff that I've traded continues to hold, continues to play, and continues to become a potential for another move, which is why, as you guys might notice, crypto's been on my list forever. It's still on my list, right? Euro US dollar just came on my list back this week, actually, right? Yeah. EU got on my list right here. This was Sunday's webinar. This is where I said, you guys, we're going to see some shorts on this. I'm going to look to follow it. And then we had the move. And then we had a move. And then I actually looked to take a move to continue this down, but got broken even, which is fine. It happens. And then it came up, and now it came down, it came up, and now it's just playing around. But you can already guess that in the upcoming week, which would be this week, EU is going to be on my list. Does it mean I'm going to trade it? Likely not, just based on where it is right now. But if it wants to continue and start breaking down, there's a very high likelihood that I will be trading this move and looking to take it lower, right? Because at that point, the move has continued to set up, and if it wants to make the move that I'm anticipating, that I understand I'm looking for, then of course I'm going to trade it, right? So as we kind of talk through examples of the past week, as I talk through the struggles of some traders in the past week, recognize all of those things are a setup for the upcoming week, right? Because you will notice as you work through even the most recent 10 webinars that each webinar is based in real time and usually real life examples. And when you see that, you start to understand how we think about markets, which is a very powerful thing, because once you understand how others think about markets in a trending environment, whatever it might be, you begin to develop that for yourself. And when you have that, well, you become close to unstoppable, right? Roberto says, morning. I've been proceeding with a challenge this past few weeks after doing proper testing. The thing is, the spreads are messing a lot with my system. Would like to know if you have any recommendations. It's kind of weird because I see a lot of members trading lower time frame without any issues. Here's an image. Well, instantly, because you should know the answer to this, right? Instantly, the answer becomes trade much more liquid pairs and just stick to those, which means less trades, but that's what you have to do. Up the time frame that you're trading, increase the stop size that you're trading, or reduce your risk. Those are the only 4 things you can do. The only 4 things, right? That's all there is to it. There's nothing more. There's not like some special thing where I'm like, listen, there's a special broker, okay, where everything is gonna get fixed, because that's not how it is, right? Stop order filled. Live. Okay, yeah, so like if you're trading such a size that your risk gets pretty much doubled from when you actually enter, you need to up your time frame or reduce your risk. That's all you can do, right? It doesn't really matter if you see other people doing it. Either they're trading lower accounts, either they're in a testing phase, either they're trading much more liquid pairs. But it doesn't mean anything, right? If other people are doing it, doesn't mean that that it might be the same situation for you. So honestly, it just comes down to, if this is the case, then you need to do one of the 4 things I just discussed. That's all you can do, right? We're training for war. Okay. John says, hey Anton, what are your thoughts on using different MA settings on different time frames? Didn't you try something like this a few months ago? No, I don't think I tried doing anything like that. I usually keep them consistent across all time frames. But my thoughts are the same as always. It's fully fine if you want to do it, but when I get used to using a specific set of MAs for a specific reason, like how is price interacting with the ones I'm using? Well, because price is fractal, price is going to interact similarly across all time frames. So instead of thinking about 20 different setups of MAs and trying to decipher how I'm going to use this one on this and this on this, I keep it consistent for myself. So again, the more inconsistencies you have with the ways you view things, the more variables that exist that you need to be able to be aware of. Now, I am not smart enough to be aware of all those variables. I'm just smart enough to know that if I have an edge and I execute that edge and it's relatively simple, I will make money. So I'm going to look for a way to do that without complicating the process for myself. So, yeah. Sapir says, I asked this about 2 weeks ago, caught 2 5-minute trades on this daily move. The 5-year T-notes. Nice. I asked about this 2 weeks ago. Good for you, Sapir. Well played. I don't even know how you trade these things. Oh, they're just futures. Okay, yeah, so that makes sense. Morning, Matt. What's up, guys? Going to be a good week on gold. Yeah, it looks like gold is setting up very beautifully. it looks like this week is going to be a perfect week for gold. If this can continue to play out, like, this is perfection, right? You have accumulation that is very much prominent. You have price continuously being bought up. You have price making new institutional moves higher with relatively recent ranges. And right now it's just surfing and moving alongside the MAs that are being bought up. Oh yeah, this upcoming week on gold is going to be a very nice one if we can get, you know, again, like same thing from last week. So this is where watching recent webinars is always helpful. But same thing as last week, right? If you think about the actual risk profile of just the bias alone, the potential for the upside is infinitely higher than the downside, right? Where even you might not even get a trade, and then the week might just do this, and then there's nothing for you to touch, right? There you go, done. You do nothing all week. Or the week does this, right? And you get to make money. This is the beautiful way that I kind of try to show you why trend trading is one of the best things that you can do for yourself if you start to understand how trends work, because you limit the downside in such a huge way, but you only create huge upside. And then that upside can only grow once you're in a trade, because once the upside begins and then it goes through normal new stage 1s into new stage 2s, right? You can be part of that entire move, which is a very, very cool thing. So yeah, the upcoming week on gold is going to be very, very clean if we can continue to move higher. This is like perfection, absolute perfection. And like you can already see what's likely happening, right? A lot of people are looking at this. So like this upcoming week, you know, if you want to think about it this way, this comes a little bit from my most recent public video, right? But it's also something that I teach here time and time again. This is what real liquidity looks like, right? Notice that I'm not using equal highs, equal lows, equal whatever to decide where the liquidity lies. I'm using an understanding of trend. Most orders that are, let's call them dumb money or on behalf of dumb money, exist like this right now, right? At least in my book. Now, I don't know if this is true or not. I don't know if I'm going to be correct or not, but because of the way that I approach trading, I know that my downside of being wrong is so minimal that I might not even take a loss. I might take a break even at most. And my upside of being right is so infinitely better that if I get a single trade within this area here, right, that can pay for itself and other losses 10 times over, right? Which is how, over and over and over again, as I've shown you guys, and why we collect data, you, over time, guarantee with a system to make yourself money, because, let's open up my data collection sheet. So I inputted the data up to this week, so I finished updating my actual data here. You can see, again, over and over and over again, that looking for moments to trade where one context is very good, you're executing your simple system, you're looking at small losses, no losses, or many break-evens, and then you're looking at huge upside potential. This is what oftentimes happens. You go through periods of normal drawdown and break-evens where nothing happens, and then you make brand new all-time highs, and you do this over and over and over and over and over, right? And over and over and over again until you, well, your system becomes compounded and you start making money, right? And then again, like, just to pose the question to you, because I saw something this week. I saw something this week from someone, and they asked basically, if I can find it, yeah, it's right here. So this week I saw something very interesting, you know, cut the FX. Posted a really impressive like test. So this is what it looked like when he posted it. And he said, you know, this is 187 trades from 3 pairs from 2022 to 2024. So that's already all good, right? But then came the age-old question. Is this enough to make a living? Now, I hate this question personally because the answer is always yes, because it always comes down to scalability, right? The answer to this is always yes. Because, you know, I framed it very quickly for him. I said, this is a very poor way to, you know, ask a question or think about it, because if this was the exact system that he had, this one right here, no different, on a $2 million account from 22 to 2024, that would be at 3 mil at the end of those 2 years, right? And with that same question, I asked him, is 1 mil profit over 2 years, which is 500K a year for all the mathematicians of the world out there, enough for you to live? Now, you guys can answer that question for yourself, but in my personal opinion, my humble opinion, 500K a year puts you in about the 0.5%, 0.1% of earners in the world. Okay? And in my opinion, if that puts you in that kind of tax bracket, you are in more than a happy position to have results along those lines, right? So again, the question of is this something that I can do long term? Is it really something I can do? Yes, of course the answer is yes. The only question is, how long are you going to wait to actually get started at doing it at a high enough confidence level so you can actually follow it through, right? Because many traders, well, you guys know this because I've done this. You've very likely done this. We'll start fucking around with live money, with funded accounts very, very early without having that confidence built up yet. So the prospect of you getting to this point, or a point just under it, takes a lot longer now because you've already dedicated an infinite amount of time to trading your live money without having any of that confidence develop first, right? So, and then again, like I use a 2 mil example, but again, if this was a 1 mil example, right? Similarly, that would be a return of 250K a year. And again, I ask you the question, is 250K a year enough for you to survive, or enough for you to live, or for you to do this long term? And again, 250K a year, just so you guys know, just to really put this all into perspective, is a higher salary than what doctors make on almost like a double. I think it's almost double of what they make. Okay? On average, now again, it's not always correct. You know, I'm not trying to like create numbers out of my head, but on average, if you have a $1 million account, which by the way, every trader is going to have if you're a profitable trader, at some point you're reaching $1 million guaranteed. And at some point does not mean in 10 years. It means you can very likely reach it. And I hate putting goals on this, but you can reach it relatively quickly, in less time than it takes to get an education for being a doctor. There you go. You make more than a doctor at a $1 million account with these results. So then I pose the question right back at you, right? So cut that. This is something for you to think about. Are you now happy with your results, or do your results feel lackluster and it's not enough, right? Because with a 1 mil account, which is something that you should theoretically be guaranteed to have as a trader that's profitable, you're already making more salary a year than a doctor. Just keep in mind that someone that spent over, what is that, 26 years of their life, 27 years of their life learning to do that. Just so you understand, right? It's insane when you think about the timology of it, okay? So yes, trading can of course be a full-time thing. That goes without saying every single week. And similarly, right, you can look at my own results from the start of around, you know, there was one trade here that was insane. You guys know this on crypto for me. But if you just look at my results from March, okay, so my results from March have been, oh, you can see them right here. Oh wait, this is April? Oh yeah, January, February, March. Yeah, so April. So you can see the results from April, which have been really, really nice for me, right? I mean, you can look at my kind of little cheat sheet here, okay? You can look at this. And again, the question is, on a $2 million account, since around April, the start of April, or since the start of March, let's make it the start of March, just to be safe, 2 months. You know, is a return on a $2 million account of 3 million now, compounded, enough for you to survive? Right? And all of a sudden, it becomes a joke to ask the question, because now you start realizing that, oh, well, of course that's enough. That's beyond enough, and that's with a 0.5% risk. And then you start worrying about the shit that actually matters, not, oh my God, is this enough money for me to live? You start worrying about, hey, let me grow my confidence in actually executing my system so I can get to a point where this is possible a lot faster, right? Gold, yeah, exactly. Yep, we've been following this thing, right? This has been perfect. Gold, yep, this beautiful run up. I think I traded this run up right here. Now we've been going sideways. That's the 1 hour. And I just said we're going to expect the move higher now, right? That's exactly what I'm looking at right here, right? So you're just looking at it on a 1 hour, exact same thing. Yep, absolutely beautiful. Now, can it come down first at the start of the week and then do this? Yep, that could be another opportunity. This might be how the week goes. It might flush out first, come up, and then it will set up that same surf, and off we go, right? And this will be me following it on a lower time frame. But again, notice in both these scenarios, that's my odds of being wrong, that's my odds of being right, and then infinitely more because of the fact that we have multi-time frame alignment. And then if it fails and I wait, I then again create a moment where this is my odds of being wrong, these are my odds of being right, and infinitely more on the upside in terms of what's available. And again, this goes the same way for those of you that are sitting here going, why is he always going long? Going on the short side, same exact thing. If we were looking at a shorting market, this is how we would look at it, right? Isn't gold range bound on the 30-minute and the 5-minute? No, not in my opinion. If it is for you, then that's fine, but I see this buildup of new institutional structure, which is clearly showing a willingness to keep moving higher. Nothing is really getting in the way of this institutional-based structure right here. You have models that are bullish, bullish, bearish, bullish, bearish, bullish, which is accumulation, which is what you're seeing right here. So we're moving in accumulation within multi-time frame accumulation. Most recently, you've had a break higher, and you've created a fresh new range that is, again, above prior ranges, and is now surfing rising MAs, while all of them are pretty much rising. So the expectation is to keep going long. And then if you partner that with a higher time frame, like a 5-hour, well, I mean, take a look. Does this look like a market that is in a range-bound market, or does this look like this? There's zero reason this can't go now to, what, like 25.20. So like this week, if I'm in this thing, I'm looking at this thing to go to 25.20. Around here. Again, why that price? Just because I'm looking at like the stage 2, maybe like here, 25.08. So again, like price is likely going to reach up into this again, right? I did this exact same thing with you guys a few weeks ago when price was here. When price was here, I said, okay, we're getting the sideways, and then we're probably going to get a reach up, a sideways, probably a reach up, a sideways, probably a reach up, and we're probably going to reach up at least into 2,300, 2,400. Then we reached up into that because this was based on a weekly. If you guys remember this, right? We looked at how price was reaching higher and higher and higher and higher. And I told you guys price would reach around 2,400 just based on basic stage 1, stage 2 analysis, right? It's very likely to reach up into around this area here. And now that's what it's done based on the weekly, because the weekly has been showing us bullishness. So now if I step down lower, within that same move, this is now the fractality of price, you're getting that new stage 1, and you can see how a new stage 2 can now play out from this, which is why we're likely going to reach higher up, because it hasn't disproven its ability yet to continue reaching. So I don't think gold is stuck at all in any range. I think gold is absolutely beautiful right now. And I will 100% be following this thing in the upcoming week, right? Because, again, if I conduct my analysis through the few steps that I take every single week when I look at any pair, any market, everything is pointing towards the fact that price wants to keep going. And then just to make it even easier, if we open up the MentaFX screener, right? And we look at gold, ZAO USD, there is a very specific story that is being told to you by the screener. Nothing about this is telling me that price is wonky, price is 50-50. Everything about just this alone is telling me that it wants to go bullish. So as long as the price action can also reflect that, which it is clearly reflecting that, and it's not showing any sign of slowing down yet, well, I'm going to be in it for the next run up. Yeah, like this 2,400, 2,480, 2,450, whatever, I don't care. Like, it doesn't matter because, prices, I'm getting involved in this probably around one of these prices here for the move higher, right? And this will be my trades this week because that's what price is showing, right? So I do not believe gold is range bound. Now, is it range bound on a 5-minute? Maybe. Let's take a look. No, not at all. Not in my opinion. right? You had range bound, somewhat range bound, and then price broke away from whatever this nonsense was, making accumulation and making a clear institutionally bullish push, either like this or like this. Both are perfectly valuable and valid. Again, section 1 material where there's no specific way that your higher highs, higher lows, or structure can be viewed. It's an understanding of how is money inflowing into this market. And then most recently, you have a clear run from a model perspective higher. And then from there, you're now holding up on the averages. So right now, like price wants to do something like this. Or if it flushes out of the open, it'll go into more sideways market. You're correct about that. And then new accumulation will come in. And we will start a new reaccumulation. And I will be in the trade here or higher up because this will happen either there or here or somewhere. At some point, it's going to happen. So again, like you can see firsthand as we go into an upcoming week, I know exactly what price is going to do if I'm getting involved. There's nothing about this that's confusing to me. Now, the reason for that is because I've, of course, put the experience hours behind myself. There's nothing confusing about what I'm going to do because, well, I've done this so many hundreds of thousands of times. I've done this for likely just over 20,000 hours now. So that will put me at, what, I think 800 days, 900 days without sleeping. So 1,800 days of testing the same kind of thing or testing the same markets. And that's around where I probably am. So I know exactly what I want to see out of a market if I'm going to take a trade on it. Right? There's no question about it. I know exactly what price is going to do for me to get an entry, and where it's going to happen or where it's likely going to happen, or for me to get an entry, right? Because it can come up, reaccumulate, and then give me a setup here. So I know exactly all the possible parallel universes of how this price is going to get accumulated and start moving if I'm going to enter it, right? When you get to that point, you also begin to eliminate any form of entering early, entering for whatever reason there might be, for entering for a FOMO reason. It's all gotten rid of because there's nothing there that now that holds you back. There's nothing there that's going to force you to make a decision that is poor, because at this point, again, everything's worked out in your mind for what you want to see on a given market at any given time, right? What's up, Fatoni? Happy to see you, man. Welcome back to the team. Meant a lot of the time in a stage 2. So let's draw this out as we read questions. So again, we all understand price moves in general, stage 1s and stage 2. This is how it moves. Stage 1s, stage 2s. So what he's asking about is in a stage 2. So let's assume we're inside of one of these. Okay. He says there's a lot of those shallow retracements that usually bounce off the MA. So actually, let's look at a real example because he's correct. That does happen. So let's just look at gold because we're on it. Let's go to a 30-minute. Okay. So let's look for a stage 2 where that is prominent. So something like this 5 hours, perfect. Okay. Because you have this longer term stage 1 and then new stage 1s and stage 2s that are just shallow, making shallow pullbacks into, let's say, the 10 EMA, which is why I use the 10. You can see this right here. In the situations, you get an abnormally large range in a stage 2 that's still considered fresh. I find normally the EMAs get disrespected and price will go down and put in a larger stage 1 despite holding its range because of before the next run. In the case that price makes an abnormally large move, should we expect an MA failure more often? Well, where? Right? I don't really see that. Like even in this example, right? So I just brought up an example. I don't see that happening, right? Do you have an image where that's occurring, let's say, where you're now looking at it and saying, oh, should I not watch it? Should I watch it? Because right now, right, I don't see that happening here. There's no failure, right? And the last failure that happened, which you could argue is here, well, I stayed out of all of it until it did what? It showed accumulation. I still remember the webinar. Yeah, webinar 141. Right here, as it made that break higher, this is where I said, this week, guys, we're going to start watching for gold longs. It's starting to look good. This is webinar 141. Actually, you know what? Again, that's in the recent top 10. So again, for those of you that are new, in the recent 10 webinars, you would have seen us predict this move. So if any of you have been sitting here going, how is it bullish? And when did they know? Well, now you know. Hold on, let me find this for you. Yeah, of course. Where was it? Gold at 2049 on the weekly. This is where the webinar was. One more back, actually. Hold on. This is where the webinar was. Take a look. Take a look. This is where the webinar was made. Okay? What did I say about it? Watch this. Daily. Look at the expectation. It's clear accumulation due to the institutional structure. And look what I drew out. A continuation at least to 2260 based on what I'm looking at here. Okay, let's look at that on the daily. This is where it was. Take a look. That's that exact same candle. There it is. That's that candle. An expectation to at least 2260 or so. Now we're not done because I went down lower. Hold on. And again, this is in the recent top 10 webinars, just so you guys remember that. We looked at the screener, which I always do, as you know. Look at the 4 hour. Look where it is right here. Look where I said we've just broken higher. We can expect a move out of this. Take a look where that happened. Let's look at the 4 hour. That high. Let's draw that high in. That's webinar 141, where we discussed this potential move. That's that 2260 level that I marked. Look at price. That is what we traded. That is what the team traded. That's where the team made multiple good moves. That's where the team had multiple funded accounts. When did you guys see the most funded accounts? In the last 2-3 months. How long has gold gone up? 2-3 months. You're starting to see how when the trends occur and you're aware and ready for the trend to happen because of the fact that you've studied price over and over and over again, you see the same thing happening and you begin to get involved with it, you start to see results not just from one person but from multiple. This is how it happens, right? From there. And again, like, I hope that even if you're brand new here today, I hope this alone shows you why it's so important you work through the concepts and the material here, because you're going to see firsthand how we view markets that are shit and we don't watch them, and how we watch markets that become clear because of how they're moving, and then we follow them. Like, look at this move that we got out of this. You're going to see the same thing happen with Bitcoin. You're going to see how we didn't watch it until around like here. Yep. And then we started watching it even more clearly here. And then we got moves out of it. And I had a member personally, so just for the people that are new and don't know this, I had a member personally trade this and this move, all amounting to over 100K plus profit, real profit, not on a fake account, not on a funded account, on his own account, 100K plus profit just on this move alone, and multiple, because he traded it a few times, you know. So yeah. What's going on here? Oh, my mouse just disconnected. Hold on. Very interesting. Okay, we're still good. Everything's recording, just making sure. Looks good. Okay. So let's keep going. Money comes in and we are good. Yeah. Gold. So King's talking about gold right now. I completely agree. This is so ready. I cannot wait to trade this week. Well, maybe it just fails, right? Because remember, I always take a pessimistic, I think, approach in trading, where every week I assume I'm taking losses only and price is not doing what I want it to do. So if anything better than that happens, like this, you already know I'm going to be in it. And then I'm going to be expecting, as I take them, well, actually, what's my first assumption that's going to be in this week, even if money comes in like this? What's my first assumption, guys? You guys should know this if you've been here for a while. No, Ole, not even a -1. Not even a -1. That's correct. There's not even going to be a trade for me to take. My assumption into the coming week is that I'm going to be doing nothing. It's going to be a boring week where I'm not even going to be able to take a loss. That's how bad the week is going to be. Now, let's say I do get a trade. What's my instant assumption off the trade? Now, I'm ready to take my -1. Yes, I get to take a -1 because if I can take a -1 now, what does that mean for my system? Well, for my system, that means... Where's my thing? For my system, that means if I can start taking losses now, I'm finally adding to my curve, which means over time, I'm likely going to make money because I need this to go in the drawdown now. If I can't go in the drawdown, what does that mean? That means I'm not taking trades. So I hope that I get a trade. I'm assuming no trades, but if I get one, I hope it goes into losses because that means I guarantee I'm going to make money over time. Great. Now let's say it's not a -1 and I get to move my stop to break even. What do I assume? Beautiful. I'm going to get a break even on this trade. Even better, I'm going to go sideways instead of going down. Even better, because that means that when I do win, I'm making even more money because of what I taught you guys in regards to break even versus wins, where break evens save you an infinite amount of losses because they count as a loss, but they're not a loss. And then when you get your wins, the win is worth even more. Oh my God, I'm adding even more to my equity curve. And all of a sudden now, when the win comes, because the trade is going to eventually work out, because again, I understand how trends work, and I'm going to catch a trend because I understand what I'm looking for, this will be up here. And the world will look at it and say, there is no way you made 100% in 3 or 4 or 6 months. That's fucking crazy. Yeah, it is crazy. But it's only done because I follow the trend. That's it. And if the trends come, I'll take them. King says 38.5% break-even rate. That's fucking beautiful. Yeah, look at these stats. This is insane to me, guys. Just so you guys know, I've never had a system that had a higher break-even rate than a loss rate. This is because of recent changes that I made to my system. This is crazy to me. Absolutely insane. Okay? Even I personally believe that my loss rate should continue going up a little bit. I believe I need to go into some kind of deeper drawdown, like maybe even under this low. Like literally go into a much deeper drawdown because this is insane stats. But at the same time, it's because I follow very strict rules and I get involved in very, very clear areas where, again, my odds of being wrong are so low, and even if I'm wrong, I'm taking only one loss max, and the upside is infinite. And look at Dan. Oh, look at Dan's. Oh my, you can't do this to me. This is disgusting. This is so fucking good. Like, I hope you guys understand that his wins become so infinitely more powerful because of this. Okay? Each win he takes is worth almost like 5 times more RR because of this. So when he shows up to a given week, do you guys think Dan is sitting there thinking, when is my next win coming? Or do you think he's sitting there going, it's a fucking break even. I'm so happy. Yes. Right? Because the fact of the matter is that the break evens are the thing that is building his equity curve. Nothing else. This right here is building his entire equity. This is what's making sure his equity goes to an insane compounded return. Right? Now post your equity curve down for me really quick. I just want to see it. And remember that this guy is at like a 0.2% risk, or like 0.5% risk or something low. Yes, Victor! Yeah, look at this. Is crazy. It's crazy. Oh, it's just crazy. This is 50 trades. He's almost doubled his account, guys. At 0.5% risk. This is Dan. You guys, please try to see for yourself why losses and break-evens are so powerful. Look for yourself why, when a week comes, I am so excited to get break-even. I'm so happy about it that I get that rule met. I'm so happy about being able to even take a loss because it adds to my list. Oh my gosh. Again, the curve goes up. Why does it go up? Think about why it goes up. There are reasons that this is going up. It's not going up because he wins trades. It's going up because he protects his downside in such a way that the upside produces infinitely more value. Okay? Burke, like, this is so beautiful. It's so beautiful. This is so beautiful. So beautiful. Yes. Yeah. Look at this drawdown period. Look at it. This is like perfection. Look what happens. Does it go down 50%? Does it go down infinitely? Now let me ask you, would it do this if this rate was higher or this rate was lower? It would. This would go much deeper. But instead he gets to go and stay literally inside a pocket where his losses are so minimal to the downside and then the upside becomes infinite again. Losses are minimal, upside is infinite. Losses are minimal, upside is infinite. you start to see how systems survive and how systems create money. Smith says, hi Anton, I'm new here. I'm excited. I just joined because of how you read the models. Please, where can I find a video for it? Basically from webinar 100 onwards. But models are dealt with throughout the entire course. And I'll go, even when I break down a trade today, I'll walk you through the models. Because again, the models aren't based on anything very black and white, right? It's based on understanding how the breaks that are occurring are either in line with other time frame breaks and the overall context or not. And if they are in line, then you create a model out of it, right? Yep. Yeah. I mean, you guys are seeing it firsthand. This is how markets move. This is how equity curves move. This is how profitable traders move. This is how it happens. There's nothing new. There's nothing new about any of this. Nothing new. This guy that just started his data collection journey is creating a profitable market out of stage 1, stage 2s. And it's going to stay in accumulation or reaccumulation over time because, again, he has good rules. That's it. I'm going to scroll back up here for a second because I scrolled down very quickly. Gold looking good. Says Olay. If it breaks down here on a 30-minute, it will be choppy. Yeah, so like on a 30-minute, right? So if gold broke down and broke this low, right, it would likely enter distribution. So it could be reaccumulation, but it likely becomes distribution. So at that point, you expect chop or downwards moving action. But that's the beautiful thing. If it breaks, again, there's nothing for you to do because you already have yourself keyed into what price needs to do for you to actually get a trade on this. Otherwise, you know how it's going to move. And that also could mean a longer term stage 1 that then just becomes better when? Later. And then you get to follow it. Exactly what happened here. Because on the 30-minute, this might have been more long term, which it was, right? On a 30-minute, this was more long term, which it was. And then as it starts to shape up, you start to watch it again. You start to watch it again. Exactly. Very good. King says, love that. Good shit. Trake says, can you explain why you're still trading gold? It looks range bound. I did. I just explained it for a while. Fatoni says, without understanding a lot of the system, I truly enjoy the alignment with trend favorability. Always, dude. And remember, like, you will get better and better, guaranteed. Fatoni, just so you know, with every passing week / month. Every passing week, you will improve, but you will become confused at points, which is good. At the end of every month, you may have confusion. That's fine because that means you're learning. But you're going to have infinitely more understanding under your belt that's going to be, in my opinion, higher than anything you've gotten from most of the stuff that you've likely consumed over like the last, let's say 3 months, 6 months, whatever it might have been, right? So you start to grow very, very quickly when you start to see this over and over again, right? When you start seeing the same thing repeated in webinars over and over, the same thing done over the last 10 webinars, the same tools used over and over and over again, the same entries taken, just in different areas and for what reason, over and over again. What trails my system do you use in that journal? What trailing system do you use? The same one as always. Get in, break even, partial with strength or with weakness. So with new momentum or the loss of momentum, partial. Move the stop loss with the double MB rule or the 1 MB rule based on the MAs. That's always been my rule. That's never changed, right? Which actually, before I continue with the Q&As, brings me to something that happened this week. The funny but true, okay? So Spicy sends a question. He sends a market. He says, okay, this is a market. There it is, right? And his first question is, how would you manage this? And the reality is my answer is always going to be the exact same. The same way as any other trade, right? So on one hand, it's funny, whatever, because like, but it's also the complete truth. I don't really care how weird or new or crazy a move looks. All I can do is use the rules that I've established, the ones I just kind of laid out for you, to manage my trade. That's all there is that I can do, right? This one is kind of confusing, so I want to know how you would do it. Well, so the first thing I would ask him is to ask him, okay, what are your rules and how would you manage this? But then secondly, what I did, and he never answered sadly, but I asked him a question and I would love to get a reply, but at this point it's not going to matter that much, but I'll still go over it, is I said, let me take this a step further and turn the question back on you for 1 second. What are the main ways that I MentFX, manage an active trade. Can you give me a rundown of my trading based on recent webinars? So again, the 10 webinar rule. If you watch the recent 10 webinars, you're gonna see how I manage my trades. What are my ways of managing a trade in general? Can you run me through them? He never answered me. So I'm gonna pose the question to some of you guys. What are the general ways that I manage a trade based on what I just said to you guys for any active trade I have? Go ahead. Anyone can throw out multiple answers or one answer. Okay, so Burke says, managing the strength or the first, second, and below. That's it. That's pretty much my entire management system, right? Dragana got it perfect. Quick break even, 50% off at momentum loss, the second off at 50% second MB. Almost perfect. Pretty much perfect, but almost perfect. If you add one more point here, quick BE is correct, 50% off momentum is correct. The second, 50% more sometimes off another momentum loss, right? If crazy strength. And then the final 100%, which would be the rest of it, would be either with an MB1 or MB2 based on MAs. This is literally my entire management system right here. That's it. That's the entire management system on repeat. So if that is the case, if that's my case, then theoretically, again, if this guy gave me an answer for my own system, he should be able to now generally figure out what I would manage on this, right? Now, it's not going to be perfect, but he should be able to figure it out. So, Ment would probably break even on this candle or this candle. Great, we're at break even now. Ment would then, usually, my first partial is at 1 to 2 or more. So likely by this point here, I'm looking to find a way to partial, probably into some kind of strength. So I'm waiting. I mean, price doesn't make any crazy strength yet, but likely I'd have a stop under this candle low. So likely my first partial, 50% is coming off there. Likely. Now, it's not a guarantee because each independent move is a little bit different. So sometimes it might be the case that I might be in this move for longer and then I might get out of it up here instead. That could happen. There's nothing stopping it from happening, okay? Because my rules, okay, are specific to me, but it does mean that sometimes the rule as it is followed may be different based on the actual move, okay? It's a very important part because the actual move also determines how I'm gonna manage something. So 50% goes off here, likely. Now let's continue going. Is there a crazy new strength that is way above certain price? Not really. So I'd probably ignore all of this. So I'd ignore it, and then on this break, as the break happens, okay, this becomes the low, so my stop loss goes here at the moment. So this is SL1. Actually, this is number 1, that's the partial. Then my SL gets moved, okay? Then insane strength comes in, which means it is very likely that if insane strength comes in due to my rules, I should be looking for a partial. So what is my second partial gonna look like? Either my second partial is going to be, let's do a dotted line to show multiple. Either my second partial, let's do it in purple. No, it's the same color. Let's do it in blue. Either my second partial is gonna be as this candle here turns to black, so right here, because the next candle would start an up move, and again, this is insane strength, so I would partial down here. So this would either be my second partial, or if I don't partial there, it'll probably go under this candle low, so that's another opportunity or another area I would have secondly partialed. Or if for any reason I didn't take either of those, I would be getting out with the new strength here. So those are likely the only places, but I guarantee that if I traded this, my exit would be here or maybe even on this down up candle right here. So my exit would be one of these two for a second partial. Okay, that's it. Then price comes down and there's nothing for me to do. Now I would still be in this trade with my stop loss right here until price breaks higher again and breaks higher again, and then I can decide if I want to move it higher or not. That's it. So it's like, how am I going to manage a crazy trade? The answer is the same way as I manage any other trade. I follow the rules that I have for management. That's all I would do, right? So this is the walkthrough of how I would likely do it. But the only way I arrive at this conclusion here is by doing what? by being aware of, one, my rules, but two, of the same thing that I've taught over and over again. Which is why I turned the question back to him and I said, hey, based on all the things I've shown, what are the rules that you've seen me tell you about, just like you guys just wrote out here, for me to partial into a move? Or for me to take management? And that's how it happens, right? Yeah, that's how it happens. There you have it. That's my management rules. That's how I would apply them. Let's go back up for a second here. Can you explain? I did that. That was my trailing system. Sapir says, no way we can survive with 500k a year. Exactly. Uh, 10 mil a year or nothing. Yeah. Doctors just operate. When taxes become your biggest concern, you are set. Yep. Are you talking about doctors in the USA? In other countries that make a lot less? Yes, I am. I try to compare all numbers to the US, just to be honest. Because theoretically, in the land of opportunity where you make the most for doing anything, if trading, which is something you can do from anywhere, can make you 10 times some of the best professions in the US, you know that you have an industry and a skill that is clearly full-timeable, right? Unlike a lot of people that say that it isn't, which is crazy to me when people say that kind of thing, right? I think it's still crazy that there's some people that do actually come to you and go, can you actually make a living off trading? Or come on, like, you're a mentor. I know you're a mentor. I know you're making money. Like, can you really do it off trading? And I look at them and I'm like, dude, whatever you've been following, whatever Instagram you've been reading, whatever shit you've been watching on YouTube has clouded the living fuck out of basic math, right? Is what's happened here. Because there's no way you have a misunderstanding about the fact that trading is a 100% feasible full time thing that you can do, right? There are things you have to do before you get to a full-time way of doing it, of course, like anything else in the world, but of course it is. The average salary is 40 to 60K a year for doing the physically hardest jobs. Yep, that's true. This is funny. King posed a very good question, like as an example to the idea of what can trading make you, and he basically said, what about this? Instead of thinking in big numbers, first of all, like I did, right? Oh, 1 mil, 2 mil, blah blah blah. What if we think about a different way? At the moment, based on where you are, now this is not going to apply to everyone, but at the moment where you are, what would an extra $1,500 to $3,000 a month do to your current life? And funny enough, Dan responded and said, if you gave me that question before I knew about trading, I would have laughed and called you a scammer. Because for a lot of us, especially relatively based on who you are, where you are in the world, how you grew up, how you understand, the world, where your earning potential is right now, an extra $1,500 to $3K a month is literally a godsend. It is more than you could even fathom, like, at any given point. Just thinking about the fact that you could add $1,500 to your bottom line a month is already like, wow, I would be kind of set for the next 5 years at that level with no problem, right? And if you start thinking that way and you realize that, then you start recognizing how much opportunity for you is in trading, right? Because again, with a funded account, let's go Ment funding. If you have a 200K funded account with Ment funding, okay, and you're risking 0.2% a trade, which is very realistic, right? 400K, 200K, 0.2% a trade. I think that puts you, even with a decent RR gain, I don't even know. Let's check it. Calculator. So at 400K, 1, 2, 3, at 0.2% risk. So that's 0.02, like that. Okay? Fuck. So $800 a trade. So on average, if we look at, like, I hate looking at my RR curve, so let's look at my RR curve, but reduce it. So my RR curve, so over the last 2 months, I've done about 86 RR. Let's reduce that by 3x. You do, no, 5, reduce it by 8x. Let's make it 10 RR. If you make 10 RR on the 400K account, where's my thing? On a 400K account, just 10 RR, okay? If you can do 10 RR in 2 months, you've added 4K a month to your bottom line at 0.2% risk on a 400K men funding account. That is a complete fucking life changer for most people in terms of understanding what they're even capable of. Okay. Now, if you assume that same percent risk with the same drawdown I had, just to be honest, because again, like, would you have blown your men funding account? 3.58 max drawdown, RR wise. That's 0.24. That's a 0.8% drawdown max. Does that blow you a men funding account, guys? It doesn't. That's nowhere near. Men funding's blow is 6%. So, and then let's say you repeated this data, which I don't think would be possible because you don't have access to that many markets. So again, let's like try to 1/3 of it. That's 20 R. Let's say you did that, and let's make it 2 months. Okay, just make it 2 months, just to be honest. So you repeated 1/3 of that, so 20 R. You just made, on a 400K men funding account, 16K. On a 200K men funding account, 8K. So again, over 2 months, you've added either 8K a month to your earning potential, or 4K a month to your earning potential, or if you want to factor in potential drawdowns and break evens and all of that, you can reduce that by half if you want. So you've added 4K or 2K to your earning potential. And again, if I ask you the question, if you can guarantee, for the most part, every month, add 2K a month to your earning potential based on where you are right now relatively in the world, is that going to change your life? And I can guarantee you, for about 60%, 70%, 80% maybe, or higher, probably higher, of members, that would be a life changer in terms of how they would be, what they would be doing in their life, like, versus what they're doing now, or versus what they could be doing. So like, are they full-time trading, or are they full-time something else? Or are they stretched between a few jobs or a few things, whatever it might be? The answer is it's likely going to be a life changer. So it's a very good way from King to pose the question that way. What does an extra 1,500 or 3K a month right now do for you? And if the answer is everything, well, then you have every tool available to get yourself there with no guarantee from me. Remember that, okay? I don't guarantee shit to anyone. You make your own destinies here. I give you everything I do. I show you what other people do. You see it all firsthand, but it's your choice to make that your destiny, right? Just remember that. No, mental effects has nothing to do with the hard work that you do. Well, I just put stuff out there, and I created an environment where you can push yourself to the highest fucking level. But everything that you accomplish, so everything King's accomplished, everything Dan's accomplished, those things are accomplished completely on their own. That's what you have to realize. And any other member, I'm just thinking of the top two because I'm looking at the chats right now. Yeah, good shit, Luke. Yeah, perfect. Look at this. Again, same thing. Again, what makes this curve go up? It's the break-even trades. That's what protects his bottom line, which increases his upside on every win. My refined system testing, want to get to 200 trades, would that be enough? As I love to say, you will know when you've gotten enough. That is literally the only answer you need. You will know when you've tested enough trades, because you will either have the confidence to go, yeah, I'm gonna go live. There's no reason I shouldn't be live right now. And I'm gonna put my skill to the test, to the actual test. Let's put it that way, right? Or you're not gonna be there, and you're gonna say, okay, yeah, the 200 was not enough. I gotta do some work. Alex says, why don't we focus on rather RR income? If it's positive over time, the only difference to make a living out of it is scalable. For two reasons. One, we actually do focus on RR only. If you look at everything I've ever taught, it's always been in RR. I always think in RR first. But the reason I teach and talk in money form is because when you start to realize how the RR reflects to actual capital and scalability, you start realizing how actually possible it is for you to do this, let's say, full time. Just the exact same discussion we just had. Because a lot of people hear RR. Oh, we made 5 RR this year, this month, whatever. And they go, that's not enough. This is stupid. And then you say, that 5 RR on my 2 mil account, right, just made me 20, 40, 60, 80, 100K. Because 5 RR on a 2 mil account at 1% risk is 500K, 600K, whatever. No, wait, sorry, 60K. Wait, 24, 100K. I'm retarded. 100K, okay? So I did 100K in a month. Now everyone looks at you and goes, oh my God, oh, what the fuck? How did he do that? When, you know, you just did the same thing. You made 5 RR on a normal account, right? That's all you did. So that is why I try to bring out some of the money side, because I need you to recognize, especially those of you that are kind of learning and getting into trading, what is on the table in a sense. But yes, we think in RR always. From a standpoint of data collection, RR is all. The screener is screaming bullish. Yes, it is. Nice. Nice. Yeah, we just shifted to being bearish on EU and we're bullish on gold. Yeah, I mean, I don't follow the sentiment thing anymore. It's funny to look at it sometimes, but yeah, we're milking this move, you know? Anton, is the stop box option indicator based on ATR or lower time for MB? Yeah, it's the ATR. Little late, but I am here. Good. Yeah, you can always rewatch it too. USD CAD was pretty awesome on daily, but last week the price was not what I wanted to see. Yeah, that can happen. Yeah, it gave a beautiful delivery though, right? Perfect delivery, and then kept doing it, but I didn't trade this as well, so. Pick to the question. A lot of times it does happen when a higher time from SSC is ran, but still appears in the lower time from stage 2 range. So what happens? Okay, so is this a 200 or is this a 10? Because this can happen with a 10, but if this happens with a 200, then yeah, you need to give it time and then let it come up and then let it follow up, and then great, you have trades now. Or it falls off and goes sideways. Because again, there's no reason for you to trade stuff that's not clear. That's all. So the 5-hour break long on gold at the end of January didn't interest you. It enters accumulation. The 5-hour break. Well, there's been a lot of them. End of January. January. Here. Yeah, I believe it interested me for one day and then it failed. So there was nothing for me to do there. It broke, then we started following, and then it failed. So there was nothing to touch. Same thing, right? Downside, upside. Falls down, then you maybe have a downside to a potential upside, but you're already going sideways for a while, so you might even ignore it, and then it fails, and there's nothing to do until it created a new downside, upside, and guess what? The upside became infinite. Right? That's how context works. That's how money moves. You're wrong 10,000 times until you're right, but being wrong 10,000 times loses you no money or minimal money, and then being right makes you endless amounts of money. The RR curve is disgusting too. Yeah, good stuff, good stuff. Yeah, the K posted his as well. Yeah, that's crazy. Absolutely crazy. This is wild. Absolutely wild. But this is the power of a proper system. And again, like, guys, realize this, right? Has my break-even rate always been this high? It hasn't. Right, I was profitable a very long time ago where my break-even rate was way lower than my loss rate. But again, with time, I'm refining the systems that I'm using. I'm refining the ways that I'm looking at markets and where I'm looking for markets, right? And I've taught you all of it along the way. So again, like, it's, you know, my trading has only gotten better. Better and better and better, which is crazy to see. Yeah, a lot of people posting their stuff. Just gonna go through this a little bit quicker. Yeah, just absolutely beautiful, guys. Very beautiful. Just everybody. Good for you guys. This is so cool. Kinda says BE with rules, not I saw the Webby where men says BEs are awesome, so now I will get aggressive with moving to break even. Good, right? Don't forget, guys, moving to break even is not a bad thing. Yes, you will get taken out, but it is one of the most beautiful things ever because you don't understand how much you protect, right? And moves that run, like go back to any move on any time frame. You know what? Here, we'll do this really quick. All right, guys, give me a time frame. I see a lot of 5 minutes. I see a lot of 15 minute, 30 minute. One tick. 45. I like it. Let's do 45 minute because you know I haven't looked at that, okay? 37. Yeah, sure. Okay, we've decided on the 45 minute. Now give me one of the markets that we've been watching for the last 3 months over and over again. So that should be between, yeah, Bitcoin, UJ oil, whatever you guys want. We've already looked at a lot of gold, but we can look at gold again. Okay, a lot of people are saying gold. So let's look at gold. Fantastic. 45 minute. Okay. Now notice something interesting. At any run up, so again, let's just go back to any run up that begins. Okay. Now let's assume any ICI. So that means all we're going to do is we're going to draw this through any high. Okay. Through any high. 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 Through any high, 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 etc. Right? You can do that again and again and again. Now, guys, if you took this entry, let's say, oh, this is a 4 hour, sorry. If you took this entry and you move to break even, what happens to this trade? It gets broken even. Right? Now, yes, if you had your stop here, you would have been in it still. But what if you had your stop here? Does it save you money or does it lose you money? If you don't break even. Yeah, so it does save you money, but if you don't break even, you lose money. Now let's apply the same thing again. Okay, over and over again. When you get it correct, what happens? Does price ever come back? When you get it right, what happens? Does price ever come back? When you get it right, what happens? Does price ever come back? So now you see why I break even instantly. I have no reason not to be in the trade if it's not ready. So now I'm willing to take many trades, break even on all of them, and make money when they go. Because now I'm going to save my money infinitely when, this would break even, when price doesn't go, I save money. When price doesn't go, I save money. Look, this would have been a loss. When price doesn't go, okay, this one I would lose money. When price doesn't go, look, I save money. This is a break even and then it makes a loss. So I just saved 1, 2, 3 RR of losses. I missed out on one trade that might have been a winner. And I made money on 1, 2, 3 trades. Actually, I saved another loss here. So I saved 4 RR. And I made money on all these trades, and I took one trade that didn't make me money. So, you're starting to see firsthand how the break-evens literally change a system. And can you see that I don't have to do anything crazy to test it, right? I found a market that I've traded for a while. I've drawn highs on every high, and I said, okay, what happens if I break even quick? And what if I don't? Do I make money? You can do this on anything. You can literally do this on anything you want. Test it. Test it for yourself. Test it for yourself. Okay? There are trades here that will break even. And there will be trades here that break even instantly, never touch break even, and make you infinite amounts of money. I am much more happier to take a break even than I am to take a big win. Why? Because that protects my bottom line when it doesn't become a big win. Over and over and over again. So I'm willing to just move to break even because I don't give a fuck about missing the win, because I know there can be another setup with the same parameters the next day, the next week, the next month, whatever it might be. So that's what I'll wait for and look for. A break even is a future win, exactly. Christian says, based on your system and your stats, you have the same exact expected value with any trade, no matter the result. Yep, exactly. Based on your system and your exact stats. Oh, wait, we said that. Sorry. That last live update. 1-to-1 BEs, 1 minute entry. Okay. If you can ICI your curve, you are good. Exactly. Yep, this is black. Well played. Going on an insane ripper right now. Like, this is insane. I expect some kind of losses, but yeah. Congratulations, dude. This is beautiful. And now I bet you black is looking at his own real life, equity curve, and he's just sitting there going, I can't believe 2 years ago the shit I was doing. Like, I bet if black thinks back to 2 years ago, whatever he was doing, he probably can't even imagine, like, where his mind was at, what his system was like, because I've seen it happen over and over again. I feel the same way. So, Anton, how do you set the trailing SL 50% automatic in C-Trade or DX Trade? I don't know. I don't know if you can. So this is us going over my rules. Good stuff. Yeah, so Shizen has a few of his own rules. That's fine. And then he says, hey, man, do you feel like with gaining experience and management of trade should be less focused on fixed rules and more on seeing similar moves? Yep, which is exactly why mine is fixed rules for me, right? It's fixed. I know what I want to do, but the way in which that I do partial, like into strength or into weakness, or am I going to move to the 1 MB or 2 MB? That all comes from experience. That all comes from seeing thousands of trades play out the same way. The question is, does the move have some velocity or whatever left in it, or does it make sense to just move it up there and take the loss, right? So like, let's say this Apple, if you get in this trade, the move starts, comes down, starts going, at this point, when it makes this break, the question becomes, on this break right there, my question on the weekly is, okay, when that move is there, which is right here, right? The question is, should I move my stop here or leave it at break even still? Now, because price would be above, in this case, the 200, and is now, this MB is literally just at the 50, and because it might take some time to get back down here, I'd probably just move my stop to that low here. Because by that point, if it gets there, I assume it's going to keep falling down. And at the same time, it just had insane strength that started flooding away from the MA, so I'd probably actually move another partial right here, right there, where I know in the next 2 weeks it's likely going to get hit. But I'm doing it because I want to protect some of this bottom line, because I understand that this move is already unproportional. So then I get partialed right here. The trade gets stopped out here. And again, notice I saved myself more money by not moving it here, because it would have been stopped as well due to the MAs. And then I can get into a new trade, right? If it sets up again. Well, let's see if it actually does set up again. So one, I would check the monthly here. Okay, monthly is really good. Maybe even 3 month. Yeah, it looks really good. So again, like if I was to take a trade, I would wait for a clean ICI now. If one wants to set up, right? So this, okay, so I will sometimes consider these an ICI, but I'll skip it here because I don't want to confuse anyone. So I'll just wait until a new one gets formed if it does. Okay, cool. So I'll take a buy stop through the ICI, right? So I'll take a buy stop, throw my stop either this low or just in the green box, probably green box, just because it protects some of the 10 MA, which is fine. And I look to take it long, same thing. Okay, then I'll wait for a break even. That will be a break even for me. When the price, when it's already up here, it's break even, right? That's as clear as day. So I wait. Okay, I take a break even. Look at this. I just saved myself money. Okay, and I repeat it again. Right, because right now it's still very clear. And if it wants to give me another setup, it will. Okay, so it does. Oh, and not yet. New candle. There we go. So it gives me a new setup through the ICI. Everything's very clear. So I'll take the long through the high. I'll protect the low. I'll look to take it long. I'll wait for a break-even rule to be met. I get tapped in. I wait. If it breaks that high, I move to break even. No, not yet because of how it paused here, but give it a sec. Now as it breaks high, I move to break even. Now, I don't know how you guys want to... You can do this two ways. You either say you broke even this and you buy here, or you don't break even this. Personally, because of the pause and then the move higher, this would not be break even yet. On this candle here, I would break even. So again, rules get changed a little bit based on the actual move, but that's fine. It just depends on the actual move. Price begins to make a very, very strengthy move. So I start considering what's going on here. It's 1.7. I don't care about it right now. Okay? I wait. Okay? This low is 1.5. This low is 2.4. I'll move my first 50% partial here. I move it here. Now I'm moving it with the understanding that I'm almost guaranteed to get tapped out now or in a second. Okay? Literally just waiting for it to tap me out here. Like guaranteeing that I'm going to get tapped out. There we go. Okay? 3.6 puts me at what? 1.5678 plus 1.8. Okay? Now the question becomes, where do I move? I have nothing to move to. So my stop loss stays because that's the only rule I have. So I wait for new MBs because there's nothing else I can do. Unless huge strength comes in, at which point I may reconsider what that means for my RR. Because right now I'm gaining 0 with the prospect of, if I moved it here, gaining 1.5. That's worth it in my opinion. So I'll move another partial here for another 1.5 RR gain. Okay, so I'll wait. Makes that up move. As it's making that up move, I'll move to that low because now it shouldn't lose it because now I guarantee that it'll probably come down deeper if I don't move it. So I wait. Okay, I get stopped out for that partial at what? 7, 3.5, 1.75. So plus 1.75. Okay, now the rest very likely gets traded with an MB or double MB because now I've taken 2 partials. Okay, so now I get to, oh wow, I pinpointed the high. What do you know? I'm so smart. Oh no, I just followed rules. Oh, wow, what do you know? Okay, now I can repeat the process again, over and over and over again. And look at this. I made money. And this was the other trade we spoke about in case you didn't get that one, just so you guys know. Same management would happen, right? And again, this is a weekly chart. Okay? It's the same thing on repeat. Right? I just follow the management rules that make the most sense to me. And again, that's just based on a lot of experience on how prices move. When a price does this, I know it's likely going to flush out back to break even or flush out a little bit and then continue. So I'm going to take some partial because then I can enter again here if it gives me another setup. Or I get to protect some of my top line because again, there's no reason that I shouldn't be partialing into a move like this. Christian says, don't you feel that you miss out opportunities keeping 25% running where you could have re-entered? Nope. This is why I don't feel like I missed out on opportunities because I've seen too many of these cases where if I didn't exit and I left on a little bit, I lose money because it just comes right back. And then don't fret, look what it did. It gave you another setup. Now let me ask you guys, if you broke even on this trade, does it ever come back? Well, you should all see that it's a no. And then you get to sustain this entire move higher. And now you're seeing firsthand why my system produces such clean trends. You get stopped out probably here because of the MAs. I'd probably just move it here and call it a day. Yeah. 10 RR available there. Yo, maybe I'll start a fucking hedge fund and just trade like weekly time frame stocks. Honestly, fuck it. Where I am in the world, 3,000 a month is a lot. Yeah, exactly. Where you are in the world, 3,000 extra a month is literally like fucking. It's like top 0.001% or something. JG says, "Hi, everyone joined a month ago, going through all the stuff step by step. How do I start making this Excel sheet?" Well, my good man, you have full access to it. You don't even have to make it. It's in #the process. Can you elaborate when you're fine to take ICIs that set up right on the 10 EMA? Like your soybean trade that slipped your stop loss. Oh my god, this was so shit this week. Oh, did I record this one? I did, yeah. This was so shit. Look at this, guys. But again, this is why I have rules in place that allow this kind of thing to happen. Look at this. I got into a short here. Took a partial, and look what happened. From here, from floating over 1.1 RR in profit, so 2.3 RR, but 1.1 RR realized, it gapped to there, and that's where I stopped out. That's where I stopped out. But in retrospect, did it have an effect on me despite gapping over 8 RR beyond me? Did it have an actual effect on my curve or anything like that? Nope. You know why? Because I understand these things can happen, and I know how I'm going to protect myself against them. I know how I partial into moves, especially if there's going to be rollover. I know how a gap sucks, but again, the gap was only a 2.65 RR loss. It was my biggest loss on any trade. It added to my overall drawdown, but this was my biggest one. If you guys notice, it's almost like the biggest drawdown I had on my account, just because of that. But that's fine by me, because again, I'm aware that this can happen. But the prospect of leaving it on is much more rewarding than not, right? And then the guy asked, can you explain why you can take this trade? Well, because it lines up with my exact rules. What's weird about it, right? It's an accumulation. It's a beautiful accumulation, comes down, makes an ICI, I buy stop it. Move to break even. It starts going, take a partial off into insane move. This looks exactly like the Apple one. And then instead of it continuing and me letting it manage me, it gapped down here. And I took a big loss on it. Right? Instead of a 2.0 tick or 8 tick loss, I took a, like over 11 tick loss on it. Which is fine, because that's how markets move sometimes. And that's okay. Because I have rules in play that allow for this kind of thing to happen and for me not to be affected in any way. Here it is. You guys see it? That's that loss. Oh god! Oh fuck! Yes, I agree. Ment effects 2 to 5%. Your own work 95%. Yep. You have all the tools, so there's no excuse. But the stuff you achieve or don't achieve in this industry is you and you entirely. You are the sole creator of everything that you have or don't have in this industry, right? Or any industry. No shit. What do you think of silver 5-minute ICI set up on the 14th at 7:15 a.m. your time? Very, very specific, but maybe. Depends on your rules, right? The 14th at 7:15 a.m. my time. At 14th? There is no setup. There's not even a 7:15 a.m. my time on this. Because it was a Sunday. It's a Sunday. Well, there's no setup for me there, that's for sure. People can take the same trade. One person makes 100, another 1,000, another 10K. Yep. Crazy risk of ruin. Yeah. Look at my risk of ruin, guys. This is the chance that my account goes and explodes. And this is actually even lower because of compounding. So like, even if I increase my risk, let's make my risk 2%. Oh, okay, there we go. So even at a 2% risk, wow, that'd be very nice, wouldn't it? Even at a 2% risk, this number isn't even accurate because this number does not account for compounding. Because what you have to realize is even if I lose a lot of my account, my risk per trade does not stay static. This is based on if your risk per trade, I believe, is static, right? My risk is in line with my actual account. So every time I take a loss, this actually like stays the same / goes down. So the odds of you actually losing the account is 0. It's actually 0 at this kind of number. That's why I said, like, if your number is below this or like at this number, you will never lose your account if you're using proper risk management principles, right? Yeah, exactly, Sarath. I give you the tools, the toolbox, and now I create the software that allows you to do it even better, right? But it's up to you to use it, right? Exactly. Hey, Ment, I've noticed that my ICIs tend to come back and just tap my break even after clear strength and continue to my TP quite often. I assume this is normal based off of everyone's BE percentages, but just wanted to make sure. Well, we went over some examples just now, right? Sounds normal to me. Oh, okay, so it says, hello, I am too late. Sorry, can't join earlier. All good. Can you please answer what I asked yesterday in Discord? Yes, I can. So number one is really quick explanation one more time about range-bound institutional structure. So there's not really, so range-bound institutional structure just refers to zooming out on a move and understanding that it's been range-bound and there's no reason to trade it. An example of that can be gold before this breakup. So right here is a good example of it, where institutionally, even though you might be moving long somewhat, the actual institutional moving long, right, plus the models of what the models are doing and breaking up and down and what the MAs are doing, put you in an institutionally or non-institutional, whatever you want to call it, stage one, where you're just stuck in a range. This is a range-bound market, where even if you trade it now, if you start taking longs, you're likely going to be met with what? Back and forth action. So it's not worth to trade it anymore. He also says, is a situation when overall structure and model is against the institutional? No, it's just when the move is not clearly having money pumped into it and instead is going sideways for a long time. Good examples of this is like oil before its recent run up. So before it did all this run up, you might remember on a 4 hour even, it was very range bound for a long time here. So this is a good example of it, where institutionally it was moving long, right, somewhat, but it was so range bound in this area here, and it had been for so long, that any trades in here were going to be poor until it started to what? Break away through new institutional longs and show you that money's coming in. So then if you started following it here or here, you made money. You can see where I started following it right here. So that's a good example where like you had a range bound market, even though it might have been delivering because of how the models and the actual structure of the move itself was moving, where it was just stuck in a range. So that's another one. Also, what are the moments where technically all the rules were met, but the step down lower is not permitted? If price is not clear. I would not go lower if price is not clear on a higher. If price is ranging like this, pretty shittily, you know, sometimes I might step down. It just depends on the market or the screen or whatever, but I likely won't step down until it becomes clear and shows me that it wants to be bullish. And then second question. Oh, you already asked. That's the same one. Okay. For example, why is XXXJPY not ready for you? Okay, yeah, so like I haven't traded UJ. Was it UJ? I don't know, this one I said we could trade. Because you can see I started watching it a few times. Oh, why didn't I watch this? Okay, well, there's a few reasons I wasn't looking at UJ during the week, but it starts with the fact that one, you have already a very start to the week that's starting to show wicks, which means that likely, you know, money's going to be very sporadic as it comes into this. Then at the same time, it begins to break down, starts coming up, so it becomes a little bit bullish, and then breaks down beyond all lows with a very aggressive push, and then since then has just been kind of slowly going sideways. I mean, now it's actually worth it to start watching just due to the fact that we're in accumulation, but on a lower time frame, right? Take a look at this. If you zoom out, look what this is telling you. This has shown no accumulation, right? Institutionally, it's like, it's long, technically, but it's breaking down model-wise, so like it's maybe short, and then right now it's making a run up, but it's breaking around, and it's stuck inside of, let's say, this action here. So if any, and it's been range-bound prior, and then it's stuck within that kind of range, even though it has new models here. And then the MAs, even the 200 is just like slopping around. This one doesn't know what it wants to do, and it just started going up. So on a 5 minute, you're range-bound and range-locked. Like, so any trades you take are likely going to be met with chop. So I ignore. This is a good example of that. Again, there's no perfect rule for it because that's not how markets work. If markets were based on a perfect rule, everybody would be profitable and it'd be very easy because when the RSI is above 80, everybody can sell and everyone will make money. But that's not how markets move, right? The markets are based on an understanding of how money is moving into them. Is it clear or is it not clear? In my opinion here, it's not clear. The market is showing multiple instances of it not being consistent and going in a certain direction. It's showing multiple breaks and back and forth breaks, and it's showing that the institutional structure is not holding in a certain direction in a very clear way. So all those things partnered together puts you in a sideways based market that I'm not going to trade. It's in a stage 1. Until it starts to maybe even break down, come back up, and then break like higher here, I won't be touching it, right? There's just nothing to touch here. That's why it's almost like back burner now. So that's how I think about all of that. Because remember, an institutional structure can start from wherever. Like, if this can even start something like this even, and it comes down and then starts going up, you can see why something like I just showed, where it's doing this is something I'd consider as a trade. Because now you've at least started to create some kind of institutional structure that's clear. Prior to that, there's nothing here unless you zoom out like this, and then look at something like this. Then maybe you can make an argument there. But then, again, the institutional structure is not the end-all be-all. You partner it with multi-time frame, you partner it with the models, you partner it with the MAs, and everything about those things here is showing extreme unclarity in terms of where price wants to go. So I ignore it because I'm not interested in putting on my money or putting up my risk in areas which are so sloppy that I might not even be able to get a break even, right? I'm interested in areas where the upside is infinite, it's very clear, the downside is very, very, minimal, and getting in means that I can very likely get a break even, right? I'll probably take a loss, that's fine, but I can at least get a break even, and that's it. I don't want to be in stuff that is already proving to go crazy. And that's what this has been proving to do for a while. Do you take trades even if the entry time frame is in a stage 1 back and forth models? Or do you wait for confirmed stage 2? Depends on the context, depends on the higher time frames, depends on the screener, depends on the actual move of that lower time frame. So yes and no. I take everything because again, there's not a specific there, man. Can all those highs that got taken out be seen as an FMB? That's how I see it. An ICI is always an FMB, but an FMB not always, right? Not sure what that means. Not sure. 460%. That's crazy. If that's on a live, that gets you to $1 million, I think, very quick. Yeah. Holy shit, damn, this gap. Blown accounts are there. Yeah, some people over leverage on this and lost most of their account. Exactly. But again, like, this is not a big deal for me. Right? This is perfectly fine. But like, this is a great example because there's some people that maybe entered this ICI or try to sell stop that, right before rollover. Now that is dumb trading. That is dumb base trading, right? That's like entering before a red news event. That's like entering before actual rollover. That's all it is, right? You're asking to hopefully lose most of your account because now, instead of this being minus 1.3 for me total, if you entered this with a normal stop, probably like that, then this becomes, what is this, 5? This becomes instantly a loss of 5, gap to here, a little bit of slippage. Yep, you get a loss of negative 12.8 RR. That could be your biggest drawdown in your entire trading career based off of one trade. That's how traders blow up. Okay, that don't understand rules or don't understand proper rules around management and entering. Not a string of losses, not many losses in a row. One trade at one bad time because they're being dumb with their trading system. Minus 12 RR. Boop, just like that. Just so you guys know, if I took that trade, that would give me the biggest drawdown I've had in my entire trading over the last 2 months by a factor of 369, by a factor of 4. I would have a 4 times higher drawdown than the drawdown I've had over 2 months over taking over 40 trades off of one trade. So you understand why I teach you guys over and over and over again to understand how rollover works, not to do dumb shit, not to trade into red news unless you understand how you're doing it or being managed properly or have a profit buffer. This is why I teach you those things. Because it's one trade like that that blows your account, or could blow a huge portion of your account. And you have to do a lot more work to make that money back than you would otherwise. Hey Anton, what other methods would you suggest for break-even rule apart from yours, as it varies from trade to trade? Would you say something like 0.5 R goes to BE straight up? Any thoughts? Thanks, sir. Well, as I love to say, the rule that I use for a reason, right? I have certain rules, and I teach those rules, and the rules I have for a specific reason. What is that reason? It works for me. So, you are free to test anything that might work for you. You can have 0.5R, 1R, 2R, strength, no strength, lack of strength, goes sideways for a while, goes up, breaks an MB, makes a new MB, fucking makes a pullback rule, goes up, I don't care. Makes a triple M above the price. You can test any of those. I'm just giving you what I'm doing and what works for me, right? Because I don't need to change a system that works really well for me. If I start seeing something that works better, then I might consider it. But until then, I don't really have anything else to do, right? I'm going to stick to the stuff that works for me the most. Emka says gaps will happen, but they should be factored in and not destroy your account. As an upside, 50% of the time you will gap in the favor. Yeah, like easily, this could have also gapped down here, right? This same amount could have gapped the other way. So like this gapped from there to there, right? It could have just as easily done this. And guess what? My rules now, instead of protecting me on the downside, would have made me an unbelievable amount on the other side. Right? And if that happened, a lot of people would look at my trade and be like, oh my God, he's just trading into rollover and making money, going crazy. He's just going crazy. But no, it's a factor for understanding this can happen. Like, does it happen often? No, not at all. Price rarely gaps like that. Look at this. Show me the last time you saw a gap like that. This was literally a first timer. Look at this. Find one moment where that happened. Look at this. I'm in February now. It hasn't happened yet. One gap. Like that. One gap. Look at this gap. Minor. One gap like the one we just saw. One gap. Show me one gap like that. Right? So it's taken into account. I understand that it's not likely, but it can happen. And if it does happen, I know how to protect myself from it. Look at this. Imagine, oh, one gap. But this one was already with the direction of the trend, so there's nothing there. It doesn't matter. And it's not even as big. There's no gap as big as that. Okay, there we go. We have a gap. But again, in the direction of trend. So this is the only one that's the same, but it's in the direction of the trend, and it happened in December of 2023. So again, if you're not aware of it, which a lot of traders aren't, and that kind of thing happens, you lose your capital. But again, I understand this is plausible. This thing can happen, and it will happen. It doesn't happen every day. It doesn't happen. It happens like randomly, really. It's like a black swan, if you want to think about it that way. But that's fine. Can you back those two systems at the same time? Sure. You can have two different journals, test them both, and then look at the differences. What risk of ruin is optimal for a challenge? Entirely up to your personal discretion. Would you ever consider upping your risk? Not really. My fundamental approach to the markets is the same on my equity curve as it is on the markets. What do I look for? Minimal downside, huge upside. So why would I want to up my risk for a potential reward? I don't care for that. It's not worth it. And again, upping my risk means inherently that my losses cost me more over time, right? Because again, if I take multiple losses, I'm down here in my equity curve. That could be a 12% drawdown, versus if I lose 3 times, I'm in a 3% drawdown. It's much easier for me to be at all-time new highs and continue making money than it is to get out of a 12%. Because if that continues now, it's going to take me a while to recover. So I use the same methodology. I approach the market the same way. I approach the equity curve the same way as I approach the market. I want to protect my downside and make the most on my upside. Maki says, I've discovered from my testing that my entries are way better if I have a clear cloud of liquidity above. Yep. Once we have taken out the high, my entries are more likely to fail. Sure. And that's great. Christian says, so you would wait. Yep. On UJ? Yeah, I would wait. It's not clear right now, for me at least. It's not that easy if you're dumb like me. Account P&L, unlucky. Yeah, this does not look like a solid system though, right? This does not look like a system of edge being executed, right? Even if it was in drawdown, that'd be fine, but this looks like emotions. This looks like emotions. This looks like a forcing of things on poor context markets and forcing them multiple times. And you can tell me if that's the case or not, but that's what it looks like here. It does not look like you look at a market, decide that it's a market you're going to watch, keep an eye on the market, take a loss or 2 losses max on it, have moments where you protect the downside to make more on the upside. This looks like you find a market, you hope you're right because you showed up to analyze that day and you really want to trade. So you start taking trades and you start hoping. And sometimes you get rewarded for taking those trades, but most of the time, over enough time, you take the inevitable large losses that come with emotionally poor decisions. This is not edge or rules. This looks like emotional craziness. Why do you prefer using the 10 instead of the 20 like you used to? Cause I like it more. Mitchell says, gotta run, family breakfast, and day begins. Go for you, man. See you. Have fun with the family, and good luck in the upcoming week, bro. Sorry I missed it, but you said you protected yourself from the gap by partialing, correct? Yep. And by entering way before rollover and having myself properly positioned before rollover happened for the case that, in the case that it happened, even a gap up would be okay for me. What do you look for in your stage ones? Once you mentioned Wyckoff, but now with the 10 MA, you just want to see some sideways retrace. Yep. AWD says, hello, Ment. What do you think of the EuroJPY 5-minute setup on the 18th at 5 a.m. your time? I hope it's not a fucking weekend again, but let's see. 5-minute on the 18th at 5 a.m. 18th at 5 a.m. my time. So you're asking about this portion here. We'll go through the things, right? Okay, so you have overall bullishness, XXX JPY pairs generally moving bullish. Yeah, I mean, getting bought up clearly, moving higher, has reason to go higher. That's perfectly fine. Take a look at the 30. A lot of sideways action. Institutionally, not creating proper moves because it's moving lower here. So it's failing to move, but it is starting some kind of mini institutional push here. A little bit wicky prior to looking at it. You have some wicks are showing themselves up. So right now, I don't think it's a good time to look at it at all until it starts making its way out. So same thing as UJ, where I would wait for this to move higher, reaccumulate, and then start looking for entries here. And then it's also been range bound for a very long time in this area, and it failed to keep moving here, which would have been theoretically the better move because this was a clear reaccumulation on a higher time frame. And then it failed down. So everything here is pointing to the same way as UJ, where it's just being unclear. So I likely don't even touch it. And then we look at a 5-minute. And yeah, you had this ugly action. I tried to trade it once, then it started to shape up. I tried to trade it again. 2 break-evens for myself personally. Then it started doing the same chop around. Then it started moving, reaccumulated, moved higher. Then it got wicky here. So at this point, when it got wicky here, I probably would not have touched this at all. So no, I don't trade that. Not my kind of trade. But work through the rules for yourself. Yeah, not my kind of trade. Can you explain a little bit about EMA versus SMA? Yeah, one is exponential, the other one is simple. One is calculated using an exponential, the other one calculates using a simple average. You're welcome. The question is about EMA versus SMA in men's system. I like EMA the most. Why not SMA? Because EMA has worked better for me. Test both. See the ones that make more sense to you. I like the EMA the most now. It makes the most sense to me. Yep, Ole said it best. Test them. Oh, King said it best. Test them both. Ole said it best as well. Test them. Ralph says, yeah, I was already 1.5% away from completing the challenge and got emotional after some losses. Yep, that's what happens. It looked like edge, and then it looked like just emotion, you know, and going for double ups. It looks like you increased your risk by a factor of 2 or 3 to try to get your money back that you lost, and then you just lost more. Any FX pairs you have, any big interest in right now? Yeah, EU shorts if they begin to come down. Euro JPY if it starts to go up. UJ if it starts to go up. A lot of the XXX JPY pairs, that's really it. Silver's not a Forex pair. But yeah, I'm in, like, this is range bound right now. Okay, this needs time to, again, same thing, come out or come down, fuck around, come out, and then we can look to trade it later. Silver is not ready yet. It's good, it's bullish, it's like gold, but gold is just clear. Like, look at this. Again, look at silver, then look at gold. Two very big different stories. One is being bought up clearly. The other one is failing to be bought up. Right? So there's nothing I can do there. King says, Ment, I started following NQ short. Thoughts on it? Probably I'm not looking at it just because it's bullish, or has been bullish, but let's see. What do I have it as? NQ? US 100? What do I have it as here? NAS? There we go. Okay, so it started to show a lot of 50-50. Lower time frames are definitely being bearish, so I guess if you're lower time frame, it might be okay to follow it. Let's take a look at the actual market now. Yeah, it's been off my list for a very long time now because it's just been useless and ugly. Yeah, you can see like even last week, this is what I was looking for. Did nothing like that, so nothing to do. Let's look at a daily first. So daily is in clear reaccumulation still, but it's free fall right now. So, you know, it can still free fall to the 200, maybe even under, and then start picking back up. So right now it's in accumulation, but there's nothing for me to touch there. Weekly is probably the same thing. Yep, weekly can free fall to the 20, or I mean, sorry, the 50, and then find itself to go higher. That's fine. So nothing really there. You know, like, yeah, it's bearish right now, but it's short-term bearishness. So I don't follow markets like this because I don't care about short-term. I care about what is the long-term doing, and then let the long-term come to me. So I'm waiting for this. So there's nothing for me to touch, though. 5 hour, definitely enter distribution. You have a lot of back and forth into distribution. So yeah, lower time frame, like I just said, has the ability to follow through, or come up a little, and then follow through, right? And then start to accumulate again. So you might go through a blueprint like here. So again, you have downside potential, but this is not the kind of thing I care about. I don't care about potential downside. I care about when is it going to accumulate. So I will be interested in this here. I don't give a shit about the downside on it. It's just not worth it for me because this can turn at any point. This can get accumulated right now. It can go break, you know, break, and then when you're entering shorts here, because it might look clear like this, now I'm long. Right, so that's where you might get stopped out as a trader that's forcing shorts in a potentially long market. But on a lower time frame, it's okay. Look at a 1 hour. Yeah, this definitely, you know, a lot of back and forth, very institutionally, like I like to say, you know, stage one, finally broke out just now. So again, you had some follow through all of this. So there's still opportunity there. Now it's a little bit overextended. So if you are trading this, I'd wait for at least some kind of a pullback. But again, that pullback can start the move that I'm looking for. So I ignore. I wait for bullish. It looks bullish to me. I wait for everything else to align because right now, if anything, right, what is this showing you? 50-50. And when I see a 50-50, I don't want to be involved in markets like that because the odds of failure start to increase. The odds of a break even begin to decrease. The odds of taking a loss begin to increase. So again, I stack odds in my favor always, right? That's all I'm interested in. So I'm not interested in a market like this. I simply sit on the sidelines until this accumulates, which could be now, or it could be after a bigger down move and then it accumulates here and then it, you know, catches itself and then we get a move again, or, you know, it just starts going sideways now for 2 weeks until this catches up a little bit, until this catches up, and then here it starts going long. So again, the question is, are you okay with taking the potential losses in this potential sideways market that's going to happen here or not? And if the answer is yes, then you're fine. Right? But for me, I'm not interested in taking the potential shorts on a market that's likely going to go sideways now because I'm going to wait for this. Okay? Even if this goes down here, I don't care. I'm not interested in this, right? This market is very far from going into full distribution right now. So right now it's just back burner. Like you can see, I don't even have it watch listed. It's just useless. Okay. So that's the US 100. You said I'm not interested in those losses. Yeah, same here, right? Because this, like, people don't realize, but this can now do this for 4 months, for 3 weeks, and it would still be perfect market for longs, right? Because it would do this. And then it can just start this move, right? This is literally, you can almost see it already, right? You can almost see what it would do if it's going to remain bullish, right? And I don't want to force the opposite side of that at predicting that this is going to be the high. I don't give a fuck. I'm just going to be looking for that, right? Would you want to see distribution on the daily to be bearish? It's too far from being bearish. It's too far. It needs to literally, to be bearish, for me to be bearish on this, it needs to break this low, possibly re-break the high, re-break a low, break down, let this start doing something like this, let this start doing this, and then here, I might consider being bearish. So in another year and a half, maybe 2 years, I might be bearish on this. Right? And the beautiful thing is about being a trader is that, look at this, if this happens, people that have gotten into this now are going to have their money locked up now for over 10 years, 5 years, because it's going to take a while to get out of this area. And then even then they'll have, downside, and then you'll get the upside later. So for it to be bearish, it needs to do this. So I am very far from ever shorting US 100, okay, in the next fucking, in the next year and a half, 1 year to year and a half, I'm not shorting this thing. But I'm also not going long until I see it get cleaner. Does everyone understand? Does Thinkerbell understand, most importantly? That it's not even about the daily. The daily is very far from being bearish, right? The daily, just so you know, would have to do this. That. Broke down, break up, break down, break up, break down for it to be bearish. Right now, we just had a breakdown of this. So we only have had this happen. Okay, this is what happened. So again, to be bearish, you can see, even on the daily, we need at least this to play out. So now it still needs to go to all-time new highs, maybe break back down, break back up, fail to keep moving on the reaccumulation, break back down, and then here, if you told me you were bearish here on a lower time frame, I would say it actually makes sense. Because now the 200 would do this, or even start moving down a little like this. The 50 would be going down, and the 10 would definitely be going down. And now, do you understand how this would be a bearish signal? That's when I would have a webinar and say, hey guys, NAS is likely gonna chop or fail down now because it's finally set that up. But right now, everything is pointing towards sideways, down, aka stay out, or new accumulation, which is what I'm looking for to trade, if we get it. Everybody follow with the NAS outlook, whatever. Right, so notice that the outlooks, like I love to say, even if you watch the last 10 webinars, don't really change, right? Nothing really changes. Everything remains the same. The only difference is, am I watching that market for the upcoming week or the upcoming month or not? And if you ask me, hey, Anton, are you going to look at NAS or US 100 in the next month or the next week? I would say no. Why? Because it's likely not setting anything up. That's it. Right? Even though it's on my list. So that's what you have to recognize about markets, is that they stay on my list for a long time. And the actual change of money in that market is likely not going to happen to the other side. However, if it continues in the direction that it's been proving to go, and if everything begins to line up, which at the moment it doesn't line up, then I'm going to follow it in that direction. And then I can make my money. Otherwise, there's nothing for me to touch, right? Let me go back up here. Make sure I didn't miss anything. I think I got everything here. I did. Okay. Yes, exactly. Oh my God, we're 2 hours in. I was gonna do a little bit of a breakdown, but my voice is becoming obsolete a little bit. My voice is dying here, so I might have to skip it for today. Breakdown. I mean, I didn't have many crazy trades, to be honest, this week. You know, my best trade was likely on TWG, which is just a random stock. This was likely my best trade this week. I got slipped a little bit. You see, I entered here, right there, but I got slipped up to here, so, you know, whatever. But this was like probably my best trade all week. And it was an IPO, like it just came out that day. So you can see, like, if I look at, or 2 days ago, like you can see this is all it had. it started out on the 5 hour, came down, and then the 10 EMA came into existence. The 10 EMA came right into existence here, fell on it, and then started to move. So I was like, okay, we can maybe get a stage 1 out of this. And the 30-minute entered very clear accumulation. You can see, came out of this bearish range, instantly accumulation, caught itself on the rising 10 and 50. So I started looking at a lower time frame here, and I just I missed this. I fully missed it. This was a fine trade as well, which is fine. But then it came up, came down, came up, went sideways, and I buy stopped this, and I got slipped very heavy on this. I got slipped like all the way up to here. Yeah, like this was a crazy slip. So I got slipped up here with my normal size, so that's fine. I got entered here, and then I broke even the second this candle finished. So the second it finished, I broke even to this point. Price took off, so I moved my stop loss to this low, okay? I believe, right? Yeah. And then it took off. I kept moving to the lows, and then right here, I exited my first position up here, and only got like 3.44 out of it. Then it fell back down. Then it started to move again. So I moved to this low, then this low. And then as this candle happened, I moved to this low. This low right there. And then this candle was happening on the last 5 minutes of the day. And I didn't want to get slipped too much. So I closed the rest at this candle's like open. So I sold the rest like as it like was here. And I got slipped a little bit to down here. And then I exited this full trade. So this was actually like my best trade of the week. And it was super random. Like out of nowhere, this trade went crazy and made me over 5-6 RR. Just boop, just like that. Which was awesome. This is exactly why I trade, you know, because you know you just find a market that's clear, you take it, and then all of a sudden it's a 5 RR gainer, which is just fucking nuts. Like this thing just took off out of nowhere. Yeah, you can see like right at the end of the week, just boop, for no reason. That's what happened. Again, without it, you know, it doesn't really matter. I'm still extremely profitable here. So like without it, nothing really changes, but it was just so the case that end of the week, it just took off and there we are. Right, just takes off. Matt, what stock screener do you use? I have a buddy that built one a while back. I'm trying to ingrain it into the stock screener that I'm building right now for everyone, which should have a few things available on it, I think, very soon. So that's your little, like, you know, golden carrot. It's coming out soon. Will it be free? Well, it's definitely not free because it costs money to run, but I believe at the time it will be available to all of you guys. So, yeah. Okay. So that's this breakdown of just this trade, because it was absolutely beautiful. Had a very unfortunate no runner on coffee here. Any timeline, I don't do timelines because I don't want to upset anyone. But hopefully very soon. A lot of things on the agenda, but yes, expect something soon. Find out next time on the next episode. Yeah. Do you widen the SL when slipped or just keep it the same size? Well, it becomes widened on its own, right? Because when I entered this, I wanted my stop loss to be here. My entry was going to be like this. So I would have had a better RR, right? But I entered here, but my stop loss remains, of course, because this is where I want to be out. I'm not going to move my stop here because that's not what the trade is. The trade is, I know that if price falls down here, then I'm out, right? Prolific, give me a little bit of time, and I'll make that all available and much clearer and easier to follow for everyone. Okay, for like how to follow things during a day, what to look at. I'll make a full thing on it. Okay. Bless you, bro. Bless you. Love you. Okay. So I think I'm gonna wrap this up. I'll see you, Easy. Thank you for being here, bro. I'm gonna wrap this up. There was a few things I did want to cover, but I never have time to cover them. It's kind of crazy. Okay, I maybe make a video on this stuff and upload it to the mentorship, just for a premium little bit of psychology. Maybe I'll do that. We'll see, or talk about it next week. But I'm gonna wrap this up because we're about 2 hours and 8 minutes in. My attention span is not even that long. You guys are probably dying to get out of here. But listen, guys, let's have an amazing week. Good luck to all the traders here. Good luck on your upcoming week, whether it be that you're trading live, whether you're recording data, or whether you're brand new and going through the concepts and working through the material to get better and better. Because all those things are amazing goals and things to do during a given week. So again, thank you all so much for being here today. Ton of love and respect to absolutely everyone. I'll see you all in the trade talks. And yeah, that's all, boys.